Welcome back, Alpha Hunters. So this is my weekly overview of the markets and what we saw in this previous week and what we can kind of expect going forward. Okay, so we have up here the SPY, and for those that don't know, the SPY, the SPY, is an ETF that tracks the S&P 500. So this is roughly the S&P 500. Okay, if you want to see what the actual S&P 500 looks like, this is what the actual S&P 500 looks like. So you can see they're very identical, but this is a little bit more cleaner, a lot less gaps as it's actual trading for the 23 hours it's open. But the SPY is an ETF that just kind of mimics that. But what we can kind of see from this is we recently broke out to an all-time high towards the end of last year, in the last week or so of last year, and then kind of did nothing. We just went sideways, and then we pulled back this week. And what we can see from that is we had a false breakout. Okay, so this is a daily chart that I'm looking at, and we had a previous all-time high back over here on November 22nd, sorry. We pulled back, and then we went up, made an all-time high, and that was the all-time high was made this week on Tuesday. So since we pulled back under that previous all-time high, and with decent volume on the SPY, the thing is that's a false breakout. If you were a bull, you kind of just didn't want to see that. And I am looking for kind of more of I've been market neutral ever since this day came in. And this day, I put out a video about that, just kind of being market neutral, just kind of waiting. I did expect to see a pullback, and we really haven't gone anywhere, and that's been about 2 months. Okay, that was the beginning of November 5th, and we are January 7th. So we haven't gone anywhere for 2 months. So I do think now is probably the time, if you wanted to take a shot getting short or buying some puts on the market, just protecting yourself, protecting your positions, protecting the long-term holdings. I do think now is a good time to do so. I have gone ahead and actually done that on my portfolio. I actually bought SPY puts for 6 months out. So I'm in no means saying the market's going to zero, and if I do have a price target of where I do think we will pull back to, and it is where these double lines are down here, and this is about the 400 level on the SPY, so it'd be about 4,000 on the S&P 500. And the reason why I have those areas as a price target is we have an open gap over here, and this is from a Friday, April 1st to a Monday, April 5th. Actually, that's a Thursday to Monday, it looks like. There's a 3-day weekend in there. That was probably Easter. So that's kind of the area I'm expecting to come out. There's no way we just kind of go straight down to it and we'll be there by March. I highly doubt that, or by the end of February. What will probably happen is we'll get down into this area where we kind of pulled back over here. We'll probably get into this area and kind of chop around. So it'll be something like, like this, and then kind of pull down. Kind of just ran out of room there, and then we'll start the pull down to 400. So maybe I'm probably thinking April, May-ish, maybe early summer. It's probably when we get down to 400. That'd be probably my expectations. I don't really know if we break down this next week coming up or not. And the thing to really watch, though, if you want to be short, is this green line. If we break this green line, we'll definitely be into, just a correction type phase. Nothing super crazy. And what kind of percentage move that is from where the market currently is. So I would say to break the green line would be about about 1 more percent down will do it. But all the way down to about 400, it's been about 14% or so. And then from the all-time high, it would be roughly a 16% or so pullback. So, I mean, nothing too crazy, but we've gone so far, so fast. This is a weekly chart of the S&P 500, the SPY, and you know, from the bottom back in March of 2020. We just been going straight up. So we just kind of just need a rest period, and you can see that gap there on a weekly, just right in there. So I do want to see that gap fill, and that's kind of been the thing, is ever since we had that gap, I really been wanting it to fill, and we almost filled it here in early May, and I was really kind of bummed we didn't, because I kind of figured we would eventually get back down and fill that gap, and it might be a year after we make that gap, that the market made that gap, that we might get down there and fill it. So, but we'll see. Now, we will look at the Qs, and the QQQs, these track the Nasdaq 100. And the nice thing about the SPY, for those that don't know this, the nice thing about the SPY, real quick, I'll just hit this real quick, is it is roughly 1/10 the value of the S&P 500. So that is kind of nice to know the relationship. So if you see the SPY at 466, which is what it's currently at, which means the S&P 500 is at 4,660 points or so. But the Qs, I actually don't remember the ratio for tracking the Nasdaq 100, but it's definitely not a tenth. But it's not something that I deem important. But it's just one of those nice things about the SPY, though. The thing about the Qs here is the SPY, as you see, made this all-time high at the end of December, but the SPY didn't, or the Qs did not. It had that rally, but it did not break out that high from late November. So we have a lower high action going on. And what we can see is we actually kind of have a triple top kind of action. So we got a top here, we have a pullback, a top here, pullback, top here, pullback. So we got a little triple top action going on in the Qs, and we have a very strong support line right here. It was a previous high back over here in the August-September time frame, and we have bounced there 3 times, and we are right on top of it. So this does not look good for tech. And the other thing about the past 3 days with the Qs is you have this huge selling candle, and this was the Wednesday. A lot of selling came in after the FOMC minutes were released. And then we had a bullish buying day, and then we had another red candle today, which closed below yesterday's buying candle with a little bit higher volume. Okay, so that is kind of indicative of people are kind of rotating out of tech here, because the tech has been really strong. Obviously, if you follow the markets, you know that tech has been strong, not even the past 2 years. We're talking, and it's been really strong the past 2 years, but past decade, maybe even more, tech has been very strong. Yeah, definitely at least the past decade. So it is one of those things that people are looking for bargains, and high-flying tech companies, as the Fed looks to raise rates, are kind of just getting hammered. But that is not, it's not unheard of to have market rotation and stuff like that. Just be aware if you have tech positions and stuff like that, that there might be some serious downside coming. Okay, so one area I do follow is the XSD, which is the Spider S&P 500 Semiconductor ETF. Okay, and the interesting thing, so this is a semiconductor ETF, and I do like watching the semiconductor ETF because the semiconductor ETF is just kind of widely known. They kind of typically lead the market. They lead the market in bullish cases. They lead the market in bearish, like when the market tops out and rolls over. They lead the market in bottoms. They lead the market in a lot of economic type situations, because everything in our world nowadays, in the modern world, revolves around technology hardware and semiconductors. And if people aren't buying technology, then people aren't buying semiconductors, because these are the components in computers and computer devices, any kind of electronic device really, that needs it to run, right? So people watch the semiconductors very closely. And if you've been playing in the markets, you know, I mean, tech semiconductors have been just, oh man, just an absolute gold mine for a long time. And I'll show a weekly chart here. I mean, just absolutely been killing it. I mean, this semiconductor ETF is up. It bottomed out at the COVID crash. It got down to about 70 points, and it just topped out at like 250. So that's about a 3x. I can do math. It's a little bit over a 3x gain right there. So here's a monthly chart, and this is what it's been doing on a monthly. I mean, it's just ever since the financial collapse happened back in 08, 09, it's just been off like a rocket, man. It's almost getting kind of parabolic. And this is on a log chart. This isn't even, so if I turn log off, I mean, that's what it looks like. But long-term stuff, you always want to have log on, logarithmic chart. It makes each candle more of a percentage return instead of a point return, because as you look at older data, it becomes more irrelevant. I can go into more of that in another video, but this is something I am watching. And AMD, the two big heavyweights, right? AMD, a lower high here, and I actually tried to play it bullish right here. And then on this day, I saw this come in. I immediately closed out my position. I wasn't even having it after I saw that. I was like, nope. Or no, it was this day. Sorry, it was this day. We got it on the pullback here. Kind of figured the pullback would come. Got the pop, and it should have continued. Like if you were going to play this bullish, it should have continued. Came back into this previous support and resistance area. Should have bounced there. But the next day, Tuesday, this is the day before the FOMC. Like tech got hammered on Tuesday, right? And if we look at the, sorry, that's wrong. Sorry, Qs. Right. So you already see the tech on the Qs got hammered on Tuesday more than the SPY did. Okay, so the SPY actually topped out on Tuesday. So that's just something that I'm definitely just watching these kind of companies. And a big reason why I'm watching them is I mean, if they pull back, I'm definitely going to be getting in on long on these, on AMD, on Nvidia. I'm definitely looking for some better bargaining kind of going on. And you can see this sucker on, this is Nvidia. I mean, we got a downward trending line here, right? From its all-time high down through here. So that doesn't look good. And we got a pretty decent support right there. So we've bounced there a couple times. But we got an open gap back here. So, I mean, it just got too strong in here after it's ran up so much. And, you know, it's fine. Let the market pull back and get in some good dips. You know, it's not a big deal. And here's the other thing though, is there are a lot of great opportunities already out there in the marketplace. There's been a lot of stocks that have actually sold off quite a bit over the past half year. The only thing that has really kind of kept the market running high as it has, that's the Qs, here's the SPY, is a handful of stocks by the name of AAPL, Apple. Apple really saved the market in December. Apple single-handedly kept the market going higher in December. It was really kind of phenomenal. But, I mean, Microsoft even had kind of topped out in December. Hasn't really done much. It actually has broken down this little triple top action it put in. It's below that over the past couple days. And then, not Amazon, Google's was doing really well, and then it's topped out. So there's just a lot of things that seem like it's just kind of done. And it's fine. It's fine. I mean, just understand we're not going to be in the previous 2 years. We just ran so far so fast that we just had really abnormal rates of returns, especially even on a daily basis, because that was something I was kind of been I track. Is our daily returns have been, during bullish markets, have been 5 times higher on a daily rate over the past 2 years compared to other bullish markets. So we just need to have this kind of pullback, settle out, reconsolidate, redistribute, you know, capital across stocks and allocations, rebalance. valuations on companies, and we'll get to going higher, and then we'll look for option plays as we come out of this, as we bottom. But yeah, definitely, I'm definitely watching the SPY for the bottom though. So we'll probably get down here into the mid 420 area to 450, might chop around in this area, and then we might even look like we're coming out of it and then just get slammed down, come down to 400 and then bounce. But when we get down to 400, I will be the ultra bull. So that is at least my game plan. That is what I'm watching. I have already got in on puts because this candle on Wednesday, we did have a breakout. We should have continued higher. We did make an all-time high on Tuesday, and then Wednesday just sold right down, got back below the previous all-time high. And so it was just kind of a false breakout moment to me. And but this next week, I don't know if we sell down and break this green line, maybe Monday, Tuesday. We might, I would imagine in the middle of the week we go sideways. But regardless, I do think we will see selling later in the week, maybe like a Thursday, Friday type time frame. Okay, that is what I'm expecting. I don't know if the selling comes in right away on Monday, Tuesday, though. But if we don't break this green line and we kind of just keep riding it up, we got to break this green line, because this green line is a trend that has been set all the way back to September of 20. Nope, all the way back to July of 20. All the way back here. That green line just all the way up. So now we're just kind of like right on it. So it's like once we start to get breaking through that, just like ice, like ice on a lake. Once you break through it, you just kind of go down, right? Until you find that bottom. But I do think that bottom would probably be around 400. But anyways, hope you enjoyed it. And hopefully this gives you an idea, not only of what I'm looking at, but what I think I see in the marketplace, so that you can get a game plan for how you want to manage it. And I'll leave you with this one last thing. Give me a like if you did appreciate this breakdown, and kind of give you some clarity on what I kind of see in the marketplace. But leave me in the comments a stock that you want me to come up with a options trading plan on, and I will go over that this next week. Alrighty, take care, Alpha Hunters.